Hello there, Maverick traders. This is Rob Reinhold. It is May 22nd, and we had a little bit of excitement today and a lot of excitement after the bell. In this session, we're going to be going through what happened today. We're going to take a look at the broad markets of commodities. Then we're going to take a look at the current market, and we're actually going to be taking a look at the after hours market because it's going to tell us that we are still bullish. So we're going to be looking for bullish setups mostly, but we always carry some bears and some sideways as well.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so we had a pretty boring market today until about 2 p.m. Eastern time. So the markets were really waiting for NVIDIA. That's what it was waiting for, but we also got the FOMC minutes at 2 p.m. Eastern time, and the market did not like it because those minutes showed that the Fed is worried about inflation, and they're saying their interest rates are going to be higher for longer. So again, taking away chances of potential rate cuts. By the end of the day, the markets had fallen, and you can see the Dow was down about 0.5%. Everything was mildly down. Now, these were off the bottom. At one point, we were down about, I said the S&P down about 0.5%, maybe 0.6%. We bounced back by the end of the day. Commodities were really weak today, and they've been weak the last 2 days, oil and gold to the downside. The advanced decline line, we can see that we had, basically 2 stocks down for every 1 stock up. But look, it was still a very, very mild down day. And if we take a look at the stock chart, at the chart of the S&P, look at this. You can't say that this was an ugly day or a down day. This is literally just a high base. And frankly, it's a high and tight base where we have very, very tight candles after a very big run. High and tight bases are typically 5 candles long, and then they end up with a nice breakout to the upside. Everything about this chart is bullish. There's absolutely nothing anyone can say that is a serious technical analysis person that this market is bearish. It's just flat out bullish. And we are trading up higher from NVIDIA's earnings. NVIDIA came out. They're trading over $1,000 a share. Futures are up about another 0.3, 0.4%. We will be trading, at least if the futures hold where they are now, we will open at new all-time highs tomorrow. Coming over here to the NASDAQ, you can see the NASDAQ didn't even high and tight base. It says, no, I'm going to break out. I'm going to go higher, leading the rest of the market. Everything is super bullish. The heat map, yeah, today was a down day, but up a very, very small down day. When we take a look at our scoring system, we're above the 20, we're above the 50. The 20-50 slope is moving higher. This is a +3 market, and it's been a +3 market for about a week. Before that, it was a +2 market. We're just simply getting to the point where we're really now starting to see the strongest market conditions that we could possibly see. Let's go ahead and take a look at a couple potential trades. I've got 1 bull, 1 sideways, and 1 bear for you. All right, on the bullish side, I found a bunch of good stuff, but I want to focus here on Coinbase. Now, Coinbase had a big run, huge run here. And then what happened was it got into this little bit of a downtrend. Now, this is a bull flag pattern. It's a bull flag pattern. A very, very strong stock. And then it pulls back usually about 1/3 of the gain that it just had. And we're right at those levels. Now, the breakout, the buy signal is when it breaks out above this upper trend line, and you can see that has happened. We don't have crazy, crazy momentum at this point. But like I said, we do have a breakout of that line, decent price action here. To me, this one wants to go higher. I really like these bull flag patterns. I really like them because, again, this has now been 2.5, 3 months of consolidation, building up energy. Now this thing can take another run again. Potential trades, look, I don't want to get too crazy, but this is a +3 market. So I think 250 is a reasonable short-term target over the next week or two. So if you want to take a look at like a 230, 250 or a 240, 250 bull call spread, if someone says, Rob, I just want to do long calls, this is the situation where you do long calls. You have a +3 market, things are running, and you just got something that broke out of a 3-month consolidation. These are times to pull that out. I very rarely pull out long calls, long puts. I mostly do spreads. You can just do a very aggressive spread. Do a 250, 260 bull call spread. You're probably going to pay about 10 to 15% of the spread price. That gives you a huge upside if it does turn out to run. Next one on the sideways side, I've got Honeywell. Now this one has been in a wide range here from 207 down to 190. I'm going to focus on the upper half of this range because the market is bullish. I think this thing coming back up to its resistance levels telling you it most likely wants to go higher, but I don't think it's ready to break out and run at this point. Moving averages are just flip-flopping. Where do we want to be on the sideways? I like the 200, 205, 210. So this is going to be a slightly bullish butterfly. A slightly bullish butterfly. You can see we want this thing to go up to 205, but we don't want this to break out. I'm looking to give in this one until May 31st. So basically 7 or 8 days. As long as it doesn't break down, it doesn't break up, this is going to be a nice trade on this butterfly. And ironically, I found some really good bears out there. Now this is Intel, and I picked this before the NVIDIA news came out. So look, NVIDIA is highly likely to be gapping higher. There's no question about that, but I like that. I like when I can get a really good entry point off of a bit of news like this, because Intel, take a look at it over the last 2 days. The markets have been up the last 2 days. The NASDAQ has. It's been down. It's showing you some relative weakness. I think if you want to take a look at something, again, I'm not looking to be very bearish whatsoever. This thing likely opens up maybe at 32.50. I would love to do like a 32.33. 32.33 bear call spread or a bear put spread. I think it's a no-brainer here. I wouldn't go any below 31. I don't think the market is going to be punishing stocks. I think at best your bears are going to be going down a little bit or going sideways. That's really the best you can hope for in a +3 market when you're putting on some bearish trades. Let's talk about tomorrow. So NVIDIA earnings creating a pretty good gap. Okay, let's talk about this. Whenever you have this very bullish conditions and you get a big gap up in the market, it's very typical for people to use that for profit taking. Gap ups tend to get sold off in +3 markets. Gap downs tend to get bought in +3 markets. If we gap up more than, I'm going to say 0.5%, I would be playing more for a fade. Again, and all that means is I wouldn't be opening up any new bullish positions in the morning. I would wait till the afternoon and to see if those prices would come in a little bit. If they don't come in, I don't mind buying in the afternoon because I'm buying out 2 to 3 weeks, and I think this market is going to be higher in 2 to 3 weeks of time. Other than that, we got a couple earnings reports tomorrow after the bell, but everything has been really bullish from here on out. So +3, I don't care how you feel about it. I don't care if you don't like it, you don't trust it, whatever. I don't care about your feelings. This is a +3 market. You must be more bullish than bearish. Take care, everyone. Goodbye.